Hi, Brad Bob here, and today I want to talk about the federal long-term care program a little bit and what's going on with it. So a lot of big stuff going on with the program, and it's something you need to know if you're part of the program or if you are looking at long-term care right now or plan to any time in the near future. So let's look at the news and let's see what's going on. So this here comes from OPM, and it just goes on to say that they're suspending sales of the program. Okay, announcing a suspension of applications for federal long-term care insurance program. During the suspension, no applications will be accepted. Current enrollees may not apply to increase their coverage. Then goes on down here to say the suspension is going to start December 19th and it will last for 2 years. Okay, a 2-year suspension for the program. That sounds like a big deal. So why are they doing that? See why. This is an article from Forbes, and let's see. John Hancock is the company. The insurance company partnering with the government to run the federal long-term care program. And they warned OPM that current premiums are unsustainable and would likely have to request significant rate hikes. So my guess is this is kind of scared OPM. Also, they haven't been selling as many policies as what they expected to be. So that's been an issue as well. So those couple things are not helping, okay? Not good for the program. So the contract, it goes on down here to say that the contract with John Hancock is up in April, and we really don't have any information about anything in April. Haven't heard anything from John Hancock about if they want to renew the program or really if the government wants to renew the program or if they want to go a different route. So I suspect that that's what they're trying to figure out here with this suspension. The program itself, its premiums are competitive. So if you compare with the private market, premiums are competitive. Now, you don't have as many options or as many riders available through the federal program as you would through a private company. Now, one option that I really like is called a shared care option. And that is, say you get a policy that has a 3-year benefit, your spouse gets one that has a 3-year benefit. You can share that 6 years of benefit. So if one of you uses 2 years, dies, then the other person, the surviving spouse, has 4 years of benefit left to use. Okay, and that's a great benefit to have on a long-term care policy. It increases the odds that you're going to use it. So, what do you do? I mean, that brings us to the question, and let's look at one other thing here. There have been a number of rate increases already. There's already been 2. 25% increase, maximum increase for policy holders that had the automatic compound inflation in 2010. Then in 2016, you can see an overall average increase of 83%. Some people got 126% increase. Others got 66%. So the program has already had some increases and some pretty big ones. And we'll find out what's going to happen next. If you have a policy now, what do you do? I can't really answer that for you. My recommendation for right now would be to just hang tight. We don't know what's going to happen. Just hang on for right now and wait and see what's going to come out. It's probably going to be some kind of rate increase, but we don't know how much. We don't know when. And then when that happens, then you can make your decision. Okay, decide if you still need long-term care insurance. Look at your retirement cash flow. If you were to need long-term care, what would it cost? And could you pay for it? Okay, could you pay for that out of cash flow or not? and then make your choice on if you're going to keep your policy or not. And then if you're looking for long-term care insurance right now, the government doesn't look to be a good option right now. So you want to look at getting a private policy. I would look at that shared care option that I mentioned. Another option, what's the question I have is, what's the worst part of paying for long-term care insurance? And everybody probably has, the same hesitation. Well, I don't know if I'll ever use it. Don't know if I'll ever get a benefit from it, which is a valid concern. It's kind of like auto and home insurance. We pay for that every year, hoping we never use it. Well, long-term care is the same way. So one alternative that some people like is a permanent life insurance policy. So you get a permanent life insurance policy, and some of these policies have long-term care riders on them to where you can access the death benefit to pay for long-term care. But then another way to use a life insurance policy is if you need care, just pay for it out of pocket. You can draw down on your IRA or TSP, which could be a very good way to go, or a good way to pay for that, because you're gonna have higher tax deductions. Okay, if you're paying $70,000 for healthcare, okay, there's a good chance that most of that is tax deductible. Okay, and if that's the case, then you can take some money out of TSP or your IRAs a lot more efficiently. And then your spouse can be reimbursed with the death benefit from the life insurance, income tax free, at your death. So that's just another thought of a way to pay for long-term care. It's something that needs to be addressed when you're doing your retirement planning. Okay, something that's very important. Not saying everybody needs insurance, but I am saying everybody should look at, if you have a long-term care event, if your significant other, if one of the spouses needs long-term care for, say, a 3-year time period, what's that going to do to the quality of life for the community spouse? Okay, is that spouse going to have plenty of funds to keep living as they had? Okay, and if not, then insurance may be a necessity. So I hope that helps. Just give you a little bit of information of what's going on with the program and some options available to you. I do have another video on my YouTube page talking about long-term care and your options. Okay, thanks.